Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Broadstone Net Lease Inc. Annual Report. BNL is a diversified net lease REIT that offers a wide range of businesses and services through its portfolio of single-tenant commercial real estate properties. The company's investment strategy focuses on strong fundamental credit analysis and prudent real estate underwriting to ensure the long-term success of its investments. The company's portfolio consists of 759 individual net leased commercial properties, with 752 located in the United States across 44 states and 7 properties in 4 Canadian provinces. These properties span various property types, including industrial, retail, and others. This diversified portfolio allows BNL to cater to a wide range of businesses and services, providing them with long-term leases on high-quality commercial real estate. Some of the key businesses and services that BNL provides through its portfolio include industrial properties for manufacturing, logistics, and distribution companies, retail properties for shopping centers, restaurants, and other retail establishments, other property types, including office spaces, medical facilities, and more. By offering a diverse range of commercial real estate options, BNL enables businesses to establish themselves in prime locations, while also providing them with long-term stability and security through its net lease agreements. The stock price of Broadstone Net Lease Inc. has experienced a significant increase in the past year, with a reported year-over-year performance ranging from 24.43% to 36.39%. Several key news events have contributed to this positive trend. One major factor is the company's strong financial results for the fourth quarter and full year of 2025. Broadstone Net Lease announced revenue of $118.3 million, surpassing consensus estimates, and core funds from operations, FFO, of $0.39 per diluted share, exceeding street estimates. The company also reaffirmed its 2026 AFFO guidance, signaling confidence in future performance. In addition to strong financial results, the company has taken steps to increase shareholder value through a dividend increase. Broadstone Net Lease increased its quarterly dividend to $0.2925 per share, indicating financial health and a commitment to returning value to shareholders. The company's strategic investments have also contributed to its growth. Throughout 2025, BNL deployed $748.4 million in investments, including new acquisitions and build-to-suit developments. These investments are expected to contribute to future revenue streams and portfolio growth. Overall, the combination of strong financial results, a dividend increase, significant investment activity, and stable portfolio performance has contributed to Broadstone Net Lease's increased stock price over the past year. Broadstone Net Lease, Inc. maintains a market capitalization of $4 billion, broadly in line with the industry peer group. Broadstone Net Lease, Inc. trades at a higher price-to-earnings ratio of 40 times and a higher price-to-book ratio of 1.23 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 40% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 6.26%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline for a company can be complex and multifaceted. However, based on the provided data, several key factors emerge as significant contributors to these fluctuations. One notable trend is the variability in lease revenues, which increased by 5.2% from 2023 to 2024, but decreased by 2.5% from 2024 to 2025. This suggests that lease agreements can have a substantial impact on revenue growth or decline. On the other hand, investment in rental property saw a significant increase of $113,678 from 2024 to 2025, indicating a positive trend. Impairment charges also played a crucial role in shaping revenue growth and decline. The company experienced an increase in impairment charges from 2023 to 2024, but a decrease in 2025 compared to the previous year. This highlights the importance of accurately valuing assets and recognizing potential losses. In addition, sales of real estate had a negative impact on revenue growth in 2024, resulting in a gain on sale of $73,153. However, this was followed by a decline in 2025, with a gain on sale of only $12,601. Lease termination fees, insurance recoveries, and gain contingencies also contributed to the company's revenue fluctuations. Overall, these factors demonstrate that revenue growth or decline is influenced by a range of variables, including lease revenues, investment in rental properties, impairment charges, sales of real estate, and other income from real estate transactions. The net income of the company underwent significant fluctuations between 2023, 2024, and 2025. In 2023, it increased by a substantial plus 19.55% from the previous year. However, this trend was short-lived, as the net income decreased by minus 41.2% in 2025 compared to 2024. The decrease can be attributed to various factors, such as a significant decline in gain on sale of real estate and an increase in interest expense. Profit margins also experienced changes during this period. Although not explicitly stated in some pages, potential tenant defaults, vacancies, and bankruptcy/insolvency risks contributed to the decrease in profit margins. Additionally, increased costs from renovating properties, reduced rent/selling prices, and illiquidity may have further impacted profit margins. The company's compliance with REIT requirements also limited its ability to hedge effectively, resulting in tax liabilities. The increase in net income by plus 29.53% from 2024 to 2025 can be attributed to various factors such as an increase in lease revenues, net of $22.3 million, which partially offset the increase in other expense. However, this trend may not continue due to potential tenant bankruptcies and impairments that may negatively impact net income and profit margins. The company's financial performance indicates a positive trend in its operating cash flow. According to the extracted summaries, the net cash provided by operating activities has consistently increased over the years. In 2025, the company generated $299,496,000 in operating cash flow, which is significantly higher than the previous year's figure of $276,253,000. This increase suggests that the company's operations are generating sufficient cash to meet its financial obligations and invest in growth opportunities. Furthermore, when comparing the figures from different pages, it is clear that the company has been able to maintain a positive operating cash flow over time. The slight variations in numbers across different pages do not alter the overall picture of a steadily increasing trend. This stability in operating cash flow is a testament to the company's financial health and its ability to manage its resources effectively. In conclusion, based on the available data, it can be confidently stated that the company is generating positive operating cash flow. The consistent increase in net cash provided by operating activities over the years indicates a strong financial position, which is essential for long-term success and growth. The company's debt level has undergone significant changes over the past year. While total debt outstanding increased to $2.5 billion as of December 31, 2025, there were also instances where it decreased, such as from $298.35 million in 2024 to $290.03 million in 2025. The company's unsecured debt has also seen an increase, rising from $1,836.3 million to $2,450.9 million. In terms of interest expenses, there is a clear trend of significant increases. Interest expenses have risen by plus 28% from 2024 to 2025, with the weighted average interest rate on all outstanding borrowings standing at 4.45%. The company's debt issuance costs and original issuance discounts amortization also saw an increase, rising from $3,932,000 in 2024 to $5,488,000 in 2025. Overall, while there are mixed signals regarding the company's debt level, interest expenses have undoubtedly increased significantly over the past year. The management is optimistic about the company's outlook, citing increased contractual rents and growth in the real estate portfolio as contributing to an increase in net cash provided by operating activities. The company's strategy focuses on investing in high-quality, income-producing properties while managing risk through interest rate swaps and other hedging instruments. To achieve this, the management aims to maintain a strong balance sheet with a focus on debt management, stabilizing cash flow requirements through interest rate swap agreements and other means. Additionally, the company seeks to maximize risk-adjusted return through a balance of debt and equity in its capital structure. Overall, the management's approach is centered around creating a stable financial foundation while generating returns for shareholders. The company's strategy appears to be working, with positive financial performance indicators and a focus on long-term sustainability. However, it's worth noting that market conditions can change over time, and the company may need to adapt its strategy accordingly. The company has made significant acquisitions in its real estate portfolio over the years. According to the report, an average of $580 million worth of new properties was acquired annually from 2015 to 2025. These acquisitions were funded through a combination of debt and equity capital, cash from operations, and proceeds from dispositions of existing properties. The company also invested in rental properties with a net book value of $81 million, which was pledged as collateral against its mortgages. In terms of divestitures, the report mentions that there have been no specific acquisitions mentioned, but impairment charges were recorded for certain properties in 2025, 2024, and 2023. The company has also strategically disposed of properties to recycle capital and meet short-term liquidity requirements. Additionally, proceeds from selective property dispositions were used to fund new acquisitions and meet financial obligations. The company's acquisition strategy involves investing in rental properties with a net book value of $81 million, which was pledged as collateral against its mortgages. This suggests that the company is actively seeking out opportunities to expand its portfolio through strategic investments. On the other hand, the divestitures mentioned in the report suggest that the company is also willing to dispose of certain assets to meet financial obligations and recycle capital. Overall, the company's acquisition and divestiture strategy appears to be focused on expanding its real estate portfolio while managing its financial obligations. By investing in new properties and strategically disposing of existing ones, the company aims to maintain a strong financial position and achieve its long-term goals. The company has a history of paying dividends to its shareholders. This is evident from various references throughout the extracted summaries. On page 31, it is explicitly stated that the company has paid dividends, and this affirmation is repeated on pages 36, 57, and 99. Furthermore, the financial implications of these dividend payments are also mentioned, with specific figures provided for the years 2024 and 2025. That concludes the financial summary for Broadstone Net Lease Inc. Feel free to comment below, and I will be happy to answer them when possible.